Well, the Nifty is holding up steady, but if you look at the month gone by, IT was one sector which was doing quite okay, and this is after quite a bit of drubbing that it saw at the start of the year, given the fact that earnings have really weakened. But the big question is the worst priced in? Has the IT space bottomed out? And what's happening with the divergent moves that we are seeing in large caps versus mid cap, when a lot of small cap names and mid cap names in IT sector are up anywhere between 60 to 80%, the likes of Sonata, Cyient, etc., which have done quite well in the last few weeks itself. Let's decode all of that with Mr. Apurva Prasad. He's joining us from HDFC Securities to decode the IT sector. And Apurva, that's my big question to you. Which are those re-rating candidates in the sector that you are identifying at this point of time, especially from the mid-cap and small-cap end of the universe?
Sure. Hi, good afternoon, and thanks for having me. So, yeah, I mean, we have seen a fair bit of re-rating in some of the mid and small cap names, and I think that's more to do with the relative outperformance versus peer set, which is reflected in the most recent earnings season. So, whether it is a Zensar, whether it is a Cyient, we have seen re-rating in some of these stocks. Some of the ones where we saw re-rating happen earlier were names like Persistent Systems. So yeah, so I think it's a bit of a divergence, not bit of it's a very distinct divergence between the mid-tier performance as well as the tier one companies.
Apurva, also talk to us about how's the demand environment looking for some of these companies, especially in the West. There are two schools of thought. One is that demand has, out of concerns by some clients held back, but they'll normalize in the next coming quarters. Others say that no, this is more structural in nature, so the buoyancy of demand may not be coming back in a hurry. Which side of the argument are you on?
So we've been on the former side where we think the impact is probably more near term. The macro related problems. So Q1, Q2, which is seasonally stronger for the sector, we expect that to be weaker than how it's been historically. And then we do expect normalization in the second half of FY24. So that's really what we're building in. The macro scenario continues to be fairly challenging. And this is across the dimension, whether it is discretionary projects in some segments which are getting postponed, or when we're looking at delays in ramp up of certain deals, or whether it is delay in decision cycles, so conversion from bookings to TCV, bookings to ACV rather. Yeah, I think that continues. It's probably more dominant in verticals such as BFSI and high tech, and it's not looking as bad in some of the other verticals. So I think the way this is playing out across verticals is different. But what's happened most certainly is it looks a bit more widespread as compared to, let's say, where it was about 6 months back.
So you talked about individual counters from the mid-cap, small-cap space and the fact that quite a few of them have already rallied. But despite the rally from the large cap names, the top 5 names, which is the one which you believe is the most undervalued at this point of time?
So if you're looking valuation terms, you certainly spot a Tech Mahindra and a Wipro, which are lower relative to historically where they've been. So they're pretty much in their long-term average in terms of valuation. But at the same time, we do expect the underperformance to continue for some of these names. So while you may argue that in P terms it's low, but if I have to look on a PEG basis, which is I think a better reflection because that does factor in the earnings growth potential. Within the top 6, if I may, LTIMindtree probably look the most attractive within the peer set. So while on P basis it would be on the higher side, but if I adjust that for much stronger earnings growth performance, I would argue that LTIMindtree would be the most attractive within the large cap companies.
LTIMindtree is one of the most attractive in the large cap space, but stock specific wise, if we had to put returns into the perspective and ask you the question of which are the stocks which have the highest return potential from here on, which will those names be, Apurva?
So I persistent systems will probably come, there. So if you're looking from an absolute return potential, then persistent systems, we do expect them to clock 50-20% type of stock returns. And that's also a company where the earnings growth is on the higher side, among the highest rather, in the peer set. And at the same time, the visibility of growth, be it near term or in the medium term, is relatively higher than peers. So while they do have exposure in some of the segments that I referred to earlier, but at the same time, their bookings have been fairly strong. So from an absolute return potential, persistent systems be right up there.
Apurva, in terms of the large cap universe, the top 3-4, Infosys, TCS, HCL Tech and Wipro, that universe, the way the quality of earnings came out this time, and especially the commentary after those numbers, when you analyze them a little more deeply, not to take a near-term call, but to take a 1 or 2 year call, because generally people are kind of staying away. So automatically it is an area where margin of safety is pretty okay. Which companies' commentary and growth visibility appeal most to you from the large cap, top 3-4 numbers?
Yeah, sure. So we do expect TCS and HCL Tech to be outperforming on growth. And this is more near term. Infosys, which was growing at a premium to TCS, we expect them to go back lower than TCS, for this year. So yeah, for from a 1 year point of view, FY24, we do expect HCL Tech and TCS to be on the higher side. And in our most recent note, we've done some analysis around what some of the large clients related risks are, and the scorecard that we have built also suggests that the risk from some of these large clients cutting spend or the volatility within that is relatively lower for HCL Tech and TCS. So I'll probably put them above from that point of view.
Apurva, just before I let you go, wanted a word on Tata Elxsi, because that one has the street divided a bit. It reached that 10,000 plus mark on the share price. Then it fell quite rapidly. There are very divergent views on the street with respect to how that is likely to pan out with respect to the growth outlook. Which side of the debate are you on?
Yeah, Nisha. So Tata Elxsi used to be one of our topics earlier. We don't have a constructive stance to sell rating right now, but that's primarily to do with valuations. While we do think that the growth potential for the company over the medium term remains strong, but our concerns are really more on valuations, where we think it's a bit of a stretch. Having said that, the ER&D space is expected to outperform some of the other segments. And as we are looking at, again, end client industry, I think the resilience of some of the end clients in those verticals is higher than some of the other verticals. So I think that is going to be supportive. So, and the fact that it's a fairly dominant automotive transportation portfolio for Tata Elxsi. Growth rate relative to a softer Q4 should improve for Tata Elxsi, but our constraint is the valuation. So we do have a set on that.
On the valuations, that's why not very constructive when it comes to Tata Elxsi. Okay, Apurva, on that note, we'll let you go. Thank you so much for making time and speaking with us and talking to us about the top bets coming in from the IT sector. But shifting focus back to what's happening